There is a question here on the screen. It says the statement of income for Dimmell Company presented below represents the operating results for the financial year just ended. Dimmell had sales of 1,800 tons of product. During the current year, the manufacturing capacity of Dimmell facilities is 3,000 tons of product. So that's the maximum capacity which they can produce. But during the period, during this year, they have had sales of 1,800 tons. So the details that are given in the income statement, there is an income statement which is given, and the details that are given are at 1,800 tons of product. Fine. Below this income statement are the requirements, and the requirements say if the sales volume is estimated to be 2,100 tons in the next year, and if the prices and costs stay at the same level and amounts next year, the net income for Dimmel can expect for year 3 is. So this is for year 2. So we are asked to prepare or calculate certain details for year 3. So the formula that we are going to use here in such a situation is the desired sales. Desired sales is equal to, just look at the screen for the formula. The formula says desired sales if it is in dollars or if it is in units. So since it is given as in units, here we can see that the estimated sales are given in terms of number of units. So we can apply the formula called as desired sales in units is equal to fixed cost plus or minus profit or loss divided by the contribution margin per unit. Okay. So do we have all these details that we can solve? Okay, then fixed cost, the total amount of fixed cost, we already understand from the income statement that it is 247,500, very clearly mentioned there. Now we are asked to find out the net income. So we are to find out first profit. Net income is profit after tax. So it's just not about directly finding it out profit after tax. First, we have to find out what is profit before tax. Then after that, we have to find out what is profit after tax. So in that note, first let's apply this and then find out what is profit before tax. So fixed cost plus profit divided by contribution margin per unit. So what's contribution margin per unit? The total amount of contribution margin for the year is given as 405,000. And this was all estimated or recorded at output level of, so we saw that in the first paragraph of the question that the sales were at 1,800 tons. So looking into that, so when we apply this, before we apply directly what is desired income, let's find out what are the details. We have first fixed cost. Fixed cost is 247,500. Profit is what we are trying to find out. We need to know what is contribution margin per unit. So contribution margin per unit is equal to, the contribution margin is 405,000. So 405,000, and which is at an activity level of 1,800 tons. And that comes out to be 225. Okay, so let's substitute the data. Desired income, if we are to find out desired sales for a desired income. So let's first write the number of sales units which are given is, we have 2,100 units. So it clearly says that at an estimated of 2,100 units. So let's substitute the data. 2,100 tons is equal to, in the equation, fixed cost. See what is fixed cost? Fixed cost is 247,500. So 247,500. Then we have the profit is what we are trying to find out. So that's the missing figure. We have to find out about the profit. And the contribution margin per unit just now as we have calculated. So it would be 225. So put this one as 225 here. And then we would get what is profit. Profit is equal to 225. This goes to the other side and it becomes 2,100. Minus 247,500 also goes to the other side, it becomes minus. So now we have profit to be as 225,000. But the point is, we are to find out what is net income. Net income, the formula is this one. We see net income is equal to the profit which is earned before tax into 1 minus tax rate. And tax rate is also mentioned to us in the question to be as 40%. Income taxes, we see it is 40% is the income tax rate. So just substitute that. Now in this formula, net income is equal to net income is equal to 225,000 into 1 minus 40%, which is 0.4. We can write it as 0.40. So 225,000 into 0.6 gives us $135,000, which is option A. Option A, 135,000. This is the right answer. I hope this is clear. First, use this formula desired sales in units, substitute the data, and if check whether we have the all the required variables. We have this one, we have fixed cost. We also can find out contribution margin per unit, and there would be only one unknown variable with which we can find out. So substitute all the data. Contribution margin per unit is 405,000 divided by 1,800 units. So this is how the solution is arrived at. I hope this explanation is clear.